Just a quick comment on Cleanaway. Wednesday, the announcement around about the Brisbane City Council waste contract came out. I got pretty excited. Unfortunately, Cleanaway wasn't able to unseat CETA or Suez from the major waste management contract here in Brisbane. That's the waste collections contract. It got the far lower margin, less capital intensive post collections contract. So the impact there on earnings and valuation was actually relatively small. It was only about a 1% uplift to our FY19 onwards EBIT forecast, and only about a 1 cent per share uplift on our sum of the parts valuation. But certainly the market got excited about it. It added about 4% to the share price since then. Stock closed yesterday just a bit over $1.40. Look, the Cleanaway share price has been on an absolute rip this year. For those who've been watching, it's up about sort of 78% over the last year. Partly that share price performance to do with the quality of the management. The new CEO is certainly impressing the market. Partly to do with earnings performance, partly to do with balance sheet strength, and partly to do with low beta. Look, I'd like to also note just an upside case. So the US peers, the major waste management companies in the US, their EBITDA multiples have expanded over the last sort of 12 months or so. If I was to put Cleanaway on the same valuation multiples as those stocks are trading at, the stock's worth about $1.78. So that could be the upside case. That could be where I've got my valuation wrong. But my valuation implies around about a long run equity return of around about 8.5%, and I think that's quite appropriate for this sort of company and sort of given the speckled past that it's had. So yeah, at the moment, hold rating on the stock.